what's your take on Apple TV and what it ultimately could mean for the earnings of the company?
It is definitely inevitable. As Tim said, this is an area that is of extreme interest for Apple. And I think what we're seeing is what he basically said, pull the string and see what happens, meaning, they're going to continue to enhance the product and make, add new features. And they're going to see how it turns out. But the thing that's holding it back from what we hear is, frankly, the content. I know that wasn't addressed at that conference, but that's something we're hearing that's really holding back, Apple TV from becoming a huge hit, near term as opposed to, a few years out.
The iPhone sells what, 30, 35 million units a quarter. I mean, is there any possibility that an Apple TV could ultimately see that kind of volume?
No, it's not going to be quite like that. It'll probably be more in the low millions, like a few million a quarter in terms of potential volumes. But we're talking about an ASP that's potentially higher, much higher. So the dollar impact could be quite substantial.
And by the way, just to clarify, when you say ASP, that's average selling price. Any idea what sort of pricing Apple would put on an all Apple TV?
Yeah. So yeah, ASP refers to average selling price, and we're hearing if you look at a high quality television today from like a Samsung. Or LG or Sony, it's somewhere in the $1,000, $1,500 range. So it will have to be at a premium to that. Of course, there's lower cost sets for like 500 or less, but Apple likely will enter the more premium market. So we're hearing something in probably the 2,000 plus range. But they're also working on a set-top box potentially, like the Apple TV today, at $99, kind of much lower price point. That could also be a solution for folks who don't want to buy the whole thing, but they want the Apple experience in a set-top box.
Well, certainly a $2,000 price tag is up there. That also means high gross margins. That'd be good for your earnings estimates. Let me ask you about the note that you sent over earlier today. It's fascinating. You think that the iPad is going to be the driver of earnings over the next couple of quarters, not the iPhone. Why don't you explain to viewers your thesis there, please?
Yeah. So the iPhone 4S, right? I mean, it came out last year, so we think it could see a pause ahead of the iPhone 5 refresh. So it's not because demand is necessarily bad, but people are holding out for the new iPhone.
And by the way, as I understand, Shaw, the company's also making fewer of them as a result. So it's really managing inventory. Is that right?
That's correct. So when we talk to the suppliers out in Asia, that's what we're hearing. They're managing inventory, and they're also gearing up for the new iPhone. So that's what could cause that to be less of an upside surprise over the next 2 quarters. However, the iPad just was recently refreshed. We think that's positioned to become more of a driver, and also it's also expanding to new countries. In fact, I think it was just yesterday it just started to sell in Egypt. So that's why we see that as more of a driver over the next 2 quarters.
And if I read your numbers correctly, you're looking for what, about 12 to 15% earnings growth and top line growth of 18 to 20% over the next year. Is that about right?
Yeah, we think this could turn out conservative. The thing that we're not factoring yet, and we want to get more concrete evidence of it, is China Mobile, the world's largest carrier, over 600 million subs. Should that occur, sooner than later, obviously that would be a huge driver for upside.